Stock of the day, we thought we'd have a look at Brickworks. Not providing any profit guidance amid investment earnings uncertainty caused by the pandemic. This comes despite saying it's on target to nearly double full-year profit, thanks to the recent upswing in the value of industrial property, with record EBIT, earnings before interest and tax, tipped at its property unit, forecast to come in between $240 and $260 million for fiscal 2021. Brickworks is just one of those stocks that keeps on giving. Yes, it makes bricks, but it makes more money redeveloping the quarries once they're finished into big residential and industrial parks, don't they? It's phenomenal.
We talk so much just sort of about tech and all that kind of stuff.
Yep.
Bricks, right? And these guys, I think they listed in 1965 or something. They've actually started in 1908. It's one of the oldest companies in Australia. But if you'd bought then, you've compounded your wealth at something like almost 13% per annum over that. So $1,000 into like $550,000, you know, and as you can see there, all-time high. It's also one of those very, very rare companies that can boast an incredible dividend history. I don't believe they have cut the dividend in 45 years or something like that. So it's incredible. It does have a big cross shareholding with Soul Patts as well.
And who's the third one? There's three in it, isn't there? There's Brickworks, Soul Patts, and it'll come to me.
Oh, I'm not sure. But it's a phenomenal business, and you've really hit the nail on the head with the business model here. First, you get the quarry, usually in a really nice strategic location. They're heavy things to transport around, so you know
But the quarries are usually, they start because they go for so long on the outskirts of a city, and by the time they dig it all out,
where all the development's
it's
happening.
in a suburb.
And then like the land value. So actually, in their announcement today, and they did a site tour for all the analysts and stuff. They published that on the ASX, and the value of their properties on the when they got it revalued is actually equates to about $27 a share now, right? So that's I think they're up 8% or so today. So there's a wonderful asset backing there. Very conservative.
So the property's valued at 27 a share, and it's at $22.
Yeah, something like that. Yeah, so not just all the property, but all of their sort of tangible assets.
Yeah.
It's it seems like look, it's a very boring company, but it's a classic bottom drawer company.
Yeah. Buy it at these levels?
I think, yeah, but I would very much do it with that very long-term view in mind. It's sort of, I would buy this and maybe look at it again in 10 years kind of thing. So it's never going to be tripling tomorrow, but it's a very good one to hold forever.
Okay, Michael?
Yeah, it's a great business. I mean, obviously everyone associates them with bricks, and I think they've got about 50% of the market share in Australia, about 10% in the US, which is a very fragmented market. So they've got two very strong positions in the brick space, and obviously construction's been coming along quite nicely. Residential stuff is picking up again as well. But the reality is over 50% of its value is attributed to Washington Soul Patts with this cross ownership structure, and the rest is from the property assets. And the property assets continue to go gangbusters. So as long as you have an understanding of the drivers of that and understand that it's not purely an industrial type company aligned to the property sector, that sort of gives you a bit more clarity on it. But basically, I think it can continue to do well, but you also have to understand that it probably does trade at a bit of a discount because of that cross-ownership structure that puts a few people off. Basically protects around any takeovers and acquisitions, etc. Of Brickworks, which people see as a bit of a negative, but by and large, it's a steady, steady as she goes type company.
Yep. Okay. All right. So
for me, it's probably a hold. Right. You'd probably prefer to try and pick it at a COVID drop, like you saw on the chart.
I was looking there down at $12.
Because it does go through those cyclical weak patches, and that's probably the opportunity to do it. At the moment, all guns are firing, so you're probably not going to get too much value.
Okay.